Oh, hello everybody. I have a small lunch on the roof terrace. Yeah, today there was an interesting news about Warren Buffett. He took he bought like for $900 million like a piece of Apple. The Apple stock dropped within a year. The last 12 months it dropped 30%. People are disappointed. Wall Street is disappointed because Apple does not grow anymore their iPhone business. The number of units they sell is not growing, it's shrinking, but still it's a rock solid company. It's amazing. They make the last quarter was 50 billion, the first quarter $50 billion in revenue, and Apple made, out of the 50 billion, they made 10 billion net. That's an amazing net margin. And yeah, so people are but still panicking, and when that happens everyone sells, and people don't think about the value they get with such a rock solid company. Warren Buffett is taking advantage. When everyone is fearful, he buys, and that's the right thing to do. That's value investing. He thinks long term. Buffett thinks long term. He's a genius, and that's what you see what happens. And he will be, I'm sure, pretty much most of the time he's a long-term investor. Buffett, once he buys, he holds onto those stocks, and I think you will see it with this Apple investment. He may, like IBM, buy more over time and hold on to it. He doesn't care if the stock goes further down because he's a long-term investor, and he doesn't care what the market is doing. He cares what the company is doing. The market he thinks sometimes is really wrong, and that's why he's buying. He sees value, he sees earnings, he sees a great company, a great history, good management with long-term perspective, and that's why he's buying. There's always a difference between what the company is doing and what the market thinks about it. The perspective, they're like two different animals. And what I do is I am extreme buy and hold investor. I buy and hold onto stocks forever. I never sell. I learned it that those stocks I have the longest in my portfolio are the best, and that's what I'm gonna do. There are studies out there show clearly that buy and hold has a huge advantage. Terence Odeon he's a professor at Berkeley University. He did a famous study about discount brokers. I think he studied, he analyzed the customers in Taiwan of a discount broker, and he found out that those people with most activity in the portfolios that move the stocks the most, that traded, they have the weakest return. They are kind of losers, and those that kept their stocks and didn't move them a lot, they were doing much better, because you have to think about transaction cost. Transaction costs you money, a fee. It seems little, but it can be a lot if you trade a lot. Then you have other costs, like maybe taxes you have to pay. It depends on the stock trade. You have to pay taxes, and then you have the problem with wrong timing. You can miss out on dividends, and dividends are very important. They on dividends are like the total return goes back onto two things: dividends and stock price improvement. And the dividends is I think it's 40% of total return. Between 30 and 40% of total return is based on the dividend payment. So if you trade, you can miss out on those quarterly dividends. It can hurt you also a lot. So buy and hold is the better strategy. You buy rock solid companies, you hold on to them for decades till you retire probably, or even longer, and there will be tough times. You will lose in between money, you will make money on the paper, but on the long run you benefit when you can deal with the ups and downs. Warren Buffett always says don't jump in and out of stocks, just keep them for the long run. He says it doesn't pay off to trade. Warren Buffett kind of warns the people. He says it's very silly to do that. And the right thing is to buy like Buffett is doing, quality stocks, hold on to them at least 10 years, better longer, collect the dividends, be happy about the dividends, focus on the dividends, and don't focus on the stock price. The stock price will move up and down like crazy sometimes, and sometimes it doesn't make sense. And just keep on buying, try to save money, try to add on a monthly basis more into your portfolio, buy more stocks or buy an ETF or buy an index fund. Just keep it for the long run, keep adding every month, steady, buy, hold on to it, don't get nervous, don't get crazy, don't panic when the market goes down. The standard problem of retail investors, or for any investors actually, is even the professionals, they buy low, they sell high. Just, you can avoid it, just buy, keep buying every month, and you will do so fine till you retire. Okay, that's all from today. Bye.